And good day, traders, and welcome back to the XM Live. This is our session together with Doug. We are going to
Mm,
tackle the markets together,
tackle.
and we will see what will maybe happen. I have some trades running, all trades yesterday. Australian dollar and gold in profit. These trades missed by a single pip target. It's incredible. My target was 95.72 overnight. The price came to 71 and I let it go. I increased the target, so we will see what will happen. But today, it's PPI, right, Doug?
Yeah, yeah. Today's the PPI. I don't think it matters. Markets moving forward, but we've had a couple of really strong days, so who knows what to expect? We'll figure it out early on, but you had a pretty good move that was kind of expected. A lot of stuff took off. Um, for me, it's a wait and see approach today, just trying to formulate a strategy here this morning. And yeah, been a good week so far. What about you? Yeah, good. Things
Pretty
good.
good, pretty
All
good.
right.
Yeah.
Yeah,
So
it's
far, so good. Really, I like the moves. I mean, actually, I was buying Australian dollar yen, gold, mostly trading those yen markets. I traded even dollar yen. First, I went long, then short, and just it was not hard to trade. And actually, give me a moment. This week, yeah. 27.60% gain. Not bad. So I'm happy to trade this volatile markets. The only problem is we don't have lots of volatility when the market is waiting for the news. And now I'm stuck in trade. I can. It's incredible. Usually goes like that. You cannot manage anything until the news. So I was planning to close my trades uh, before the news and maybe leave just one trade running, but I'm not sure that I will get the opportunity to actually close them because I never close my trades in a loss. It's either profit or stop loss. So now it's there, a little bit draw down close to entry point. But as I said, I was a little bit, yeah, it's a bugger, one pip
yeah.
miss. So my target 72, and actually why I went with 72 because Wiz telling me it's 72, but I didn't take spread into account. So when you place targets, guys, always remove the spread from the target. So if Australian dollar yen has like 3 pip floating spread, then your target should be 95.69, not 72. And that is basically what happened. So but it's okay. I mean, it's low risk trade, so not big risk. So we will see. Probably after the news, everything will be much clearer than now.
Yes.
Equities are very bullish. This is very bullish. Gold is bullish. So I guess if there is continuation, Australian dollar yen will proceed up also.
Probably. Yeah, I mean, things in U.S. markets are definitely more bullish than they are bearish. Was talking about it in the last session. S&P hit the 200-day moving average bounce. That's kind of predictable. Nasdaq still remaining relatively strong, but as always, when something rallies for 3, 4 days in a row, you have to still have caution because it doesn't mean something's going to go from bullish to bearish. It just means that maybe it stops moving up so much. There isn't an aggressive day. I feel like that's what's going to be in store for today is a bunch of choppy sideways action. And that's normally what happens when something goes up 3 or 4 days in a row. Everybody takes a breather and it kind of chops sideways for a while before it kind of picks another direction. Um, yeah, but speaking of currencies, what do you think of this Euro New Zealand? Somebody brought it up in uh, the last session. I kind of like it for a little bounce play. Been
Euro
staring
New
at it.
Zealand.
Yeah, yeah. I'm not the currency aficionado on something like this. You maybe Euro USD, pound dollar, the typicals, but Euro Kiwi here. I don't know. It's semi interesting.
Oh well,
Yeah,
this is
semi.
a
Let's give it a
retracement.
5 out of 10. Maybe a potential bouncer there. Yeah.
What can I tell you, Doug? Typical
You can tell me
retracement.
whatever
I
you
mean,
want.
Yeah, well, I will be honest. This market is, well, it has 133 points of ATR, meaning that usually it gets to zero point 0.6 and then turns, let's say, into retracement. We can see because of the higher ATR that the market, well, it was, nah, not even close to 7. So I would say this is a normal point for retracement. But you know what? I would short this without blinking. Of course, not now because market now is going into counter trend direction. So market has a, you see, even weekly time frame will, if the market closes as bearish, it will make a cross. Then it will make a pretty strong. Uh, I think that all time frames will change, and it will make a strong move from the top to the bottom. So my plan is to short this. Where to short? Honestly, the best would be here. So the higher it goes, the better the short is. I'm not sure that it can go that far, but we need to monitor it. Here we can see T89 and it already bounced back. So tricky one. Maybe it will go from this level to the lower part of the chart. But honestly speaking, if I see it here with my naked, with my, with my eyes closed, I would short this without any. I don't care. Just I will short here.
I
Of
got you.
course, the market needs to come to make T89 rejection. Or if it comes here and I'm impatient, then I would go to 1 hour time frame and look for rejections here. So definitely very, very good level to go short. But as I said, it can even drop from this zone. Triple top here, T89, triple top now. Market still bearish. So this is, but you can see that this is just a retracement. So daily is bearish, 4 hour is bearish, 1 hour is bullish. So if we see a drop from this level, then 1 hour will realign with higher time frames. So if we didn't have PPIs and FOMC today, I might even get into a short now, but I'm keeping Australian dollar yen and euro yen, so I'm been exposed to these Pacific crosses,
Yeah.
Asia Pacific crosses. So I would skip this one. But anyway, it looks like it will reject now or later.
Got it. So Andy, what do you got going on over there? What's the trade? By the way, guys, let me say welcome to the YouTube viewers that could be joining us today. Really appreciate it. Every day that the markets are open, pretty much Monday through Friday, we're here. We're talking about global markets, currencies, commodities, stocks, whatever it is. We're here doing live sessions in the real, no hindsight here, everything called out in real time, several different traders, different kind of strategies, whatever you could imagine, you're going to find that objective being met right here at XM. So we hope you come back and join us. Welcome, Thanasis. I don't think I've seen you in a while, so I hope you guys are doing good. So if you got anything you want to bring up here on what we know as Winners Wednesday, that's the only reason why anybody shows up on Wednesday, because it's Winners Wednesday. You come here to win. That's what we're trying to do. Make sure you bring it up. We'll do our best to try to answer your questions, make sense of these markets, try to get you on the right side of all these trades. And that's it, man. That's what we're here for. So having said that, do you think, I know my answer, but do you think this PPI has any kind of impact on this market at
Yes,
all? You do? You do?
impact on volatility, of course, because for swing traders it doesn't matter at all. For us intraday traders, it has an impact because we cannot make money if we don't have volatility. That's the problem. So what can I do with markets that are moving like 5 pips, 10 pips in a single session? I don't like when there is no volatility. The
Right.
primary reason why I'm intraday trader is volatility. Volatility is our friend. It's not our enemy. So we need to know how to deal with it. We cannot just say, "Oh, it's dangerous. Well, I will skip it." No, there is no skipping. You need to exit your comfort zone. So yeah, for intraday traders such as myself, and big majority of retail traders, big majority are intraday traders. We need volatility. Without it, no money, no pips.
No
So
money, no
why
pips.
PPI? Of
No
course, why
money,
PPI?
no pips. I like that. No money, no pips.
Yeah,
No money, no pips. Remember that
this
song?
is it. These kind of events give us volatility. PPI, this is more or less for Canada, and of course FOMC. On these events, which are highlighted as red, it's volatility time. So when we see volatility and we are on the right side of the market, there is the time when we make profits. I don't care even if I lose. Just give me volatility. Because this what happened today and what happens every single time we have big news is boring. For swing traders, they don't care. But for us, guys, volatility is what we need. It's the food for our engines.
Yes, of course. And I think the point is, in case there's any new people just kind of lurking back there, it's more important to understand the actual market that you're trading in rather than the strategy that you're using to trade it. There's a more impact on the way somebody and the time that which somebody chooses to do something than what they're actually doing. And this is kind of like a pretty easily overlooked area of trading. We kind of fixate. I'm not saying that everybody does this, but it's very typical that someone fixates on a strategy and then they just do that over and over again, which is good to some degree. They keep doing that over and over again, but not really paying attention that markets themselves are not the same every day of the week. Every day is different than the day before. There's so many different circumstances that can impact someone's trade where honestly, technical analysis is a waste. It's not going to work. Like if the Fed comes out and cuts rates today by a full basis point, I don't care what the charts look like. The market's going to rally like it's never rallied before, whether you like it or not. Right. So there's always something that's not going to happen, obviously. But, when you do have a report in a market like this, it could upset the balance of certain things. It could create pockets of like, for example, kind of hate to bring it up, but the war there with Israel, Palestine,
Mm-hmm.
right? I mean, look what it did. It caused a gap down in the
Yes.
markets that ended up becoming a buying opportunity. It shook the tree down a little bit and provided another entry for traders that didn't get in on Friday. It gave it another spot for stocks, another spot for gold, everything gave you another shot at it. Of course, that's an extreme circumstance, but news every day can create the same type of an event. So when you news trade, in my opinion, which is just my opinion, I can always be wrong, right? It's just how I roll. When you look at a news event, it's not really the news event itself, like what the numbers are, what that means to the economy. It's the reaction that the market has. And what you'll find out over time is most of the moves that come from events, the first one is the wrong one. It's like the first move seems to be in most cases the wrong move. So in Federal Reserve, central banks, if they make their announcement, the market goes parabolic or starts going up, chances are the next move after that is down. If it goes down, the next move is up. I don't know why it's like that. I'm guessing it's because everybody has a knee-jerk reaction. Algorithms are already programmed to make decisions off of sentences. They go
Yeah.
firing away, and then they get this liquidity. Retail traders chase. They can sell into that liquidity and then bail. And then after that, you'll get a more manageable direction. Like you'll be able to see it. So a newer trader typically has a very hard time trading the first couple of minutes after announcement. And in fact, most traders have a hard time because you don't know if what you're seeing is an overreaction or a legitimate event. It's almost like every day the market opens, the first 2 minutes, you're not sure if this is going to hold, this is going to sell. There's so much day left. There's so many scenarios you don't have enough data in the pocket to say, okay, today's going to go higher, today's going to go lower, sort of scenario. To each their own, but that's kind of what we look for.